What's up, guys? How you guys doing? I'm good too. Thank you for asking. All right, guys. So today, I'm gonna discuss with you guys just the two type of traders that you normally find, right? And how they basically benefit from the markets. I'm just gonna share you some insights on certain things that I have learned and how I find it beneficial in these two types of trading styles, right? So stay tuned. Please don't forget to subscribe, like, share, comment as well, just so that you let me know the type of videos that you'd like to see more. And do follow me on my social media, all right? Just so that we can all stay connected, right? So without wasting any more time, let's jump straight into it. Okay, so the first trading style, right? It's the scalpers, right? So these are the guys that normally for an example, they normally trade basically using leverage, right? So they use leverage to benefit them in the market. Okay, so these are the guys that normally, especially South African traders, right? So what they normally do is they would put like 2,000 rand into their account, and then they would flip that account into like 10,000 or 20,000 rand. All right. So basically, what they benefit from it is that obviously when they put in 2,000 rand, they basically risking the entire amount, right? So they risking the entire account to get the results that they're looking for. So normally these type of traders, they don't necessarily use percentage when they analyze the markets, right? So they normally use value. So if they deposited $50 and they want to change that into $300, that would be their target instead of more of your swing traders where they're using ratios such as like 1:3 or 1:6, right? So yeah, so that's basically what they do. So normally when I do this type of trading, right, it allows you to not do any mistakes. Basically, you need to be entering the market exactly when the market is ready to move, right? So in this type of trading, normally your spikes would take you out if it's a big spike. Also depending on how you enter the trade. But in most cases, obviously, you would want to margin call this trade. You'd normally enter until it says not enough funds, right? So because you're looking to get the most you can, you're looking for small pips. You're not really looking to hold the trade for any longer. I mean, if you can flip $50 for an example, into 300 $300, you basically looking to enter literally the entire account in that trade. And just because now you're using margin calls, that means should the trade just literally spike a few pips under your open position, that could take you out, right? So that's the disadvantages of it. But the advantages of it is if you get the trade right, you would definitely make more than the account itself, right? And that's basically how they benefit from um from scalping, right? So one of the things that you should never do if you're going to do that type of trading is deposit the entire amount of funds that you have available for trading, right? So if you have budgeted, I'm going to use South African rand. So if you have budgeted 5,000 rand for an example, you should at least split that to 5 different trades, which means you're going to be trading 1,000 rand per trade or per position, not really position, but per trade basically, because it's per setup, per analysis that you have done, So you would only deposit 1,000 rand because you are willing to risk 1,000 rand, right? And obviously you should have your own target in terms of value, right? So if you are trading 1,000 rand and you want to flip that to 4,000 rand, it should be a continuous thing. You should always deposit 1,000 rand. You flip that to 4,000 rand, you're doing withdrawals on the entire amount, and then you only deposit the 1,000 rand again for the next trade. All right, so that is the best way to run with it. That is the best way to actually track your progress in it. And yeah, so another thing that you should also take note of is that you would find certain brokers that give you a deposit bonus, right? Which most traders also use that to get more of funds, or rather available positions to open in the trade based on the deposit that they receive, right? So there's famous brokers in South Africa which you deposit 1,000 rand, they would normally give you an extra 1,000 rand. So which means you are basically trading an account that's worth 2,000 rand. However, the account, should it get to a negative 1,000 rand, that account would automatically blow. So it's not like you are risking their bonus. It's just there for you to be able to open more positions. All right. So yeah, that's basically it for scalpers. And now I'm gonna basically which is kind of different from your swing traders, right? So when I swing trade, then I would have more of a target market, right? A target perps, or rather, I would normally target my bigger time frame, what's this, TPs, which is my take profits, and then I would have my smaller time frame stop loss, right? But again, I would also have the amount of points. I use points. I don't use perps. I use points. Then I would say, for an example, that for every 50 points that I'm risking, then I should at least make a minimum of 150, which is 1:3 exactly. So those type of traders they normally trade your bigger accounts, right? I normally do that mostly with funded accounts, right? So when I trade a funded account, then it would probably be like $10,000 account, and then I'm only risking roughly $100 per trade, right? And then I'm looking to make a minimum of $300 per trade, right? So those are the accounts where you're looking at more at percentage growth, right? So your target will probably be 10% per month on the trade, or per year. If the account is big enough, you would want to do 10% per year, which gives you more breathing space, rather, because you're not trading to look at the market. It's one of those, you trade and then you forget, you come back after 2 hours to check where your trades are and stuff like that. So the advantages of that is basically it allows you to make those few mistakes in terms of entry, right? Because your stop loss will definitely be wider than the scalpers, right? And then it will also give you, it'll be easier on your psychology, because then the market is not moving that quickly. The monies, rather, the values is not moving as quick as doing your margin call tradings. So it's one of those things that you need to find in a market. You need to find your own personality, and it's basically just with experience. The more you trade, is the more you realize what type of trader that, what are you more comfortable with, what is more easy on you when you're trading. Do you like always looking at your phone and your heart is beating quickly and you be like, oh my god, it's gonna go my way? No, it's not going my way. Okay, it's going my way, should I close, should I hold? Are you that type of trader? Or are you the trader that just likes opening up your chart, looking at your meta trader and be like, okay, fine, I'm making a profit, I'll see it after 2 hours? So it all depends on the type of person you are. So but however, you just need to know what you're getting yourself into, the type of trading styles that you're getting into, and the type of psychology you need, to be in either of these trading styles, right? So swing is more patient, you're more relaxed, you're more easy, basically low risk type of trading, and you're looking at the long term, right? Scalpers would be getting with you basically sorting out your trading finances outside of your account, right? So you deposit the amount of money that you're willing to risk per trade, you leverage it, you trade it to the max, you make as most as you can, and then you withdraw and you start all over. That's basically the process. The whole point of it, it's not to grow an account, right? So I'm just gonna also throw in some few charts there just so that you can see as well the type of trading. And then you're leveraging the account, you're risking everything in the account. So you need to be able to manage your finances outside of your MetaTrader account, all right, outside of your trading platform. So basically in your bank account, all right. Swing trade, it's the whole point of it, it's basically to grow the equity, right? Is to grow the equity, is to basically look at your percentage targets, right? Your monthly target, your yearly target. It is more of managing finances within the trading account, right? So those are the difference, and those are the type of things that you should know when you're getting into the market, so that you can identify which one are you more comfortable with, which one fits your style, which one fits your patterns of your daily patterns, and which ones are you more giving more time to, right? Which ones do you think they're gonna work out more to your personality? Because it's based on that at the end of the day, right? So yeah, guys, that's basically it for me. I hope that made so much sense to you guys. I hope that is going to help you guys to identify the type of traders that you are. And it's a Sunday today. Let's look forward to a brilliant week. I'm gonna do also a video of market overview just for the week, just so that we can see what we are ready for. NFP is over, so this week is probably the best week of trading. Markets are probably just going to be sorting themselves out, just to get back to following patterns and stop all these spikings that they used to do and all these ranging. So looking forward to seeing you guys on the next video. Stay tuned. Please do subscribe, like, comment, tell me what you guys want to see more. You guys gave me much love on my last video. Thank you very much for that. Subscribers are going crazy. Follow me on my other social media platforms, guys, and I will see you guys on the next video. Take care and bye.